Welcome to The Explainer. Today, we're diving into a really fascinating paradox playing out in Japan's economy, and it's all based on the Bank of Japan's latest Sakura Report. It reveals a real estate market that seems to have a split personality. It's booming and busting at the exact same time.
So, you've got this tale of two markets, right? On one side, you have these huge government-funded construction projects that are just skyrocketing. But then on the flip side, the housing market for regular folks, well, that's stalling out, hitting the brakes hard. It's like the entire national real estate market has been completely split down the middle.
Okay, so here's how we're going to break this all down. First, we'll look at that public works boom. Then we'll shift gears to the much quieter housing market. After that, we'll dig into some of the really interesting differences from region to region. And finally, we'll try to get a sense of what the future might hold for all of us. All right, let's jump right into the side of the market that's absolutely on fire, public investment. I mean, the report says this sector is already at a high level and it's still climbing, and this is happening all across Japan. So what's driving this huge boom? Well, it's all being fueled by these massive, long-term government plans. We're talking about the big stuff, the National Resilience Plan to beef up infrastructure, all kinds of disaster prevention projects, and then you've got these incredibly ambitious high-speed rail lines, like the extension to Hokkaido and the new maglev line.
But there's always a catch, right? And for this construction boom, the catch is pretty big. All this incredible demand is basically slamming into a brick wall on the supply side.
What we're seeing is a huge structural problem in the construction industry. There's just so much work to go around, but they're facing a serious shortage of workers and materials are still super expensive. And what's the result? You get construction delays, and you even see companies failing to bid on public projects because they just can't make it work. The bottom line is, there just isn't enough capacity to get all this ambitious work done on time. Okay, so let's flip the script and look at the other half of this story, the private housing market. And wow, the reality for home buyers is a completely different world. The report uses words like weakening or decreasing to describe it in pretty much every single region.
So, the big question is, why? Why are potential homebuyers so hesitant right now? Well, as it turns out, it's basically a perfect storm of economic pressures hitting them all at once.
It really boils down to three major headwinds. First, the cost to actually build a new home is really high. Second, borrowing money is getting more expensive because mortgage rates are ticking up. And third, and this is a big one, real wages are just stuck. That means even if you got a pay raise, it's not keeping up with the rising cost of everything else. So your actual purchasing power, what your money can actually buy, well, that's not going up.
And the analysis really hits the nail on the head with this quote. It says, prices are increasing faster than wages, so the purchasing power of households is still weak. I mean, it makes perfect sense, right? The cost of just about everything is going up, so even with a steady job, your money just doesn't stretch as far as it used to. And that makes people, well, pretty cautious about making the biggest purchase of their lives.
Okay, so that's the big national picture. But as always, the devil is in the details. And when you zoom in on different regions, you see this is not a one-size-fits-all story at all. Local factors are creating some really unique situations on the ground.
And things get really interesting when you start looking at the regional snapshots. For instance, in Hokuriku, the housing market is actually getting a boost from post-disaster reconstruction. But then you go over to the Kinki region, home to Osaka, and all the buzz around the Expo and other big projects as potential buyers just waiting to see what happens. Down in Shikoku, interest has cooled way down since government subsidies dried up, and in Kyushu, it's a totally polarized market thanks to defense-related construction. The cities are doing great, but the suburbs are weak. See what I mean? It's a completely different story depending on where you look.
So, there you have it. A story of two Japans, really. One with booming public works, and another with a stalled housing market. The big question now is, what's it going to take for the housing side of the equation to finally get back on its feet?
And the Bank of Japan's report doesn't just leave us hanging with the problem. It actually lays out a kind of roadmap, pointing to three very specific things that need to happen for a real, lasting recovery to begin.
When it all comes down to it, for people to feel confident enough to buy a home again, a couple of things are non-negotiable. First, construction costs and interest rates have to stop being so volatile. They need to stabilize. But the real key, the most important piece of the puzzle, is the people's purchasing power has to recover. And that can only happen with real, sustainable wage growth. That's the game changer.
And all of this leaves us with one final and pretty crucial question to think about. Is this just a temporary imbalance, a weird moment in time caused by a unique set of circumstances?
Or are we actually witnessing a fundamental, long-term shift in Japan's economy? A new normal, where massive national projects charge ahead, while the average household and their dream of owning a home gets left further and further behind.